And we're live. Content provided at the event is for general information only and not intended to provide specific advice or recommendations for any individual. Any performance reference is historical and there is no guarantee of future results. All indices are unmanaged and may not be invested into directly. An economic forecast set forth during the event may not develop as predicted, and there can be no guarantee that any strategy will be successful. These thoughts and opinions are those of Gimbal Financial and do not represent the views of LPL Financial. Securities are offered through LPL Financial, a member of FINRA SIPC, and investment advice is offered through Gimbal Financial, a registered investment advisor and separate entity from LPL Financial. Good morning.
Friday.
What's going on out there?
Two things. Glad to see you guys are not in a surgical setting. That's good. We can use this here. And secondly, I can hear you very well.
We managed our technical challenges. I think that's one of the key skills of the new world for which we live. I was talking to a friend the other day, and he said that his son, who's getting ready to go to college, is good with ambiguity, which is a big word that means with a lot of moving parts. And I think that's the nature of the culture we live, is that when things seem vague and outrageous, can you pivot and move on? And I think that's just going to be the skill set of the next probably decade, I think. I don't know.
Yeah, the skill set of using one of these things is interesting. Like, if you can drive a car, you can drive a Ford, you could drive a Peugeot, you could drive a, whatever.
Peugeot. What is a Peugeot? Is it like this?
I got to drive a Skoda when I was in England last year. That was pretty cool, or 2 years ago. But anyway, if you can drive a car, you can drive any kind of car. And so last week I was on a Zoom call. And by the way, we're not recommending any of these brands, but I was on a Zoom call. I didn't even know Google had a call. Did you know that? Like a Google thing like this?
Yes.
Google Chat.
I was on a Google one of these things. And then I was also on a Microsoft Teams thing. And so, like, if you can do one, you can do them all. Now, they all have differences, and they're competitors. You may like one platform over another, but nevertheless, it's a good skill. It's a really good skill to learn.
There's a lot of skills out there to learn at any age.
Word up.
Yeah, like the skill of looking into a camera versus looking at you. Is that like?
I don't have that one down yet.
Yeah, Amanda, you do a great job of looking into the camera. So.
That's interesting because I'm only looking at you guys. You guys are the big part of my screen, and I'm the little one. So.
We're a big part of the world.
That's nice. That's nice of you. How are we starting off today? You want to look at some stock indexes or some indexes in general?
Yeah, I put some notes here. Maybe I throw those out there, and then we can kind of delve into that. I was thinking about. I think for us a big deal is the idea of a concept called wisdom versus a concept called foolishness, for which maybe these ideas are subjective to your opinion, but I'm of the opinion that wisdom is a lasting way of sorting through life, and gravity, wisdom tells me that gravity is true. So if I were to jump off of the roof of this building, gravity would be the principle that would throw me on the ground, his pin on the ground. And so wisdom is just looking at life principles, no matter what your opinion is, and suggesting those are consistent. Foolishness would be to say, I think at 59 years old, I'm going to see if I can jump off this roof and land on that new grass out there. And so you've got wisdom and foolishness that you're sorting through. And then you've got, in either one of those principles, you can make good decisions and bad decisions. Does that make sense? So you could be acting with wisdom and make a bad decision, or make a good decision. But you could be acting with foolishness and do the same thing. Like they say, a blind squirrel finds an acorn every once in a while. So a foolish decision could actually be a good decision. It's just random. Does that make sense? So I throw that out there to say why we don't make specific recommendations on this show is because that's total foolishness. So if you think we're making specific recommendations when we talk about anything, it's not true. We never make specific recommendations. We're maybe making opinions, and an opinion could be wise or foolish, but we're offering our opinions on here, and they could be right or wrong. And so the reason that a specific recommendation is total foolishness is, suppose I was at a dinner party and somebody asked me what stock to buy. I could tell them what I'm buying today, but they may never see me again, right? And
Right.
so if they would have bought XYZ stock, which is not a stock, I don't think, and it's not a recommendation if it is a stock, they would never get a sell recommendation from me. So we are not making specific recommendations. We're pointing out observations which could become true or not, but they're just observations from our experience.
And if you do want a specific recommendation, we have plenty of opinions to share with you.
Specific buy and sell signals, but you're not going to see them on this show. You'll have to call us on the phone, come meet with us, or do an individual Zoom meeting. But to get a broad basement, you're going to just get opinions on here, and hopefully they'll be entertaining as well.
Man, you're really fired up today.
I've got a lot of opinions today. I don't know if I can keep them all in here. Next week, because we got so much going on today, next week I got a topic I really want to talk about, but it's not today. It's going to go into February anchor and probably next week's conversation. But what did you want to talk about?
Hey, speaking of the anchor, if you get a chance, pull out the December anchor. And if you don't have the newsletter, if you don't have it, that's what the anchor is. If you don't have the newsletter and you want to know what our opinions in December were, shoot us a message and we'll get you one. I got a text from a friend of mine this morning, and it was just the funniest picture. And it was a picture of his son going to school wearing shorts. So if you want to know more about that, shoot us an email and we'll get you a copy of the anchor.
Amanda, do we still have an archive on the website of old anchors? Or
Oh, yeah.
Put that out? I don't recall.
Not on our brand new sparkly website, no, but they're available by request.
And Amanda and I are working on that kind of thing for y'all. So we're pretty excited about some new technology that will get us there.
What index do we want to look at today, Dave?
Okay, I've got like a handful.
Well, I want to show something before we jump into those. I'm going to share my screen here. This is the #1 rated index by our trading software. #1 rated, but it's not. We're not recommending you buy these stocks. But this index was at 20 at the low of the market in March, and it is over 161 today.
Oh my gosh.
I would say that would be the equivalent if you were going to dip your toe into anything affiliated with this. It's probably the equivalent of walking along the edge of the Grand Canyon. You better be careful if you're dipping your toes in these. This is just an extremely overpriced, in our opinion, place to put money today. But this is the #1 rated one. Which one are we going to look at?
That is just cool to see, though, that the power of a group or a basket of companies that are taking risk and being innovative and doing new things. It's the power of what can happen. And so that's very cool. I wanted to start off, if we could, and look at the NASDAQ index. The NASDAQ index, again, is just a big basket of about 3,500 or so companies, technology space, healthcare, all kinds of stuff. And if you would, Keith, go all the way to the right and click on your left. Yep, there you go. How far extended is that above its 200-day moving average? My eyes aren't so good.
So this black line, for those of you who are new with us, is the 200-day moving average. And that tells you the average price of this index over the last 12 months, roughly. And it is 24% over that. Whereas over here, Doug, at the low, it was 18% below that average.
And then can you click on like September 2nd or 3rd? See what that was?
Right here?
Yeah, right around there.
That's the 4th, and it was 21%.
And that's after it had gone down 2 days.
That was in a normal market, we would say that was a correction. I think that's
Yeah.
more than a 10% drop, which when you hear the newscasters, whatever, talking about these 2 days, the market dropped from 12,000 to this third day, 10,800 roughly. So we had in this short period of time, we had a correction, which you probably haven't even realized.
So I wanted to address this specific index because I just want to thank a couple people who've called in this week and have said, hey, I want to do this with my money because I've made so much money, and we've had exciting conversations. But in one of these conversations, I reminded our friend that, hey, this may, for some of you, and I realize it's not all Gimbal clients, but for some of you, this may be the best performance your account has ever had and maybe will ever have in doing business with us. And so as you look at your performances and you're thinking about what you want your money to do, dial us up. Let's have a conversation about it, because right now there are so many optimists in the marketplace. They're reaching higher and higher numbers every day. And so normally what happens is you have institutional buyers. Those are the big endowments that are out there, maybe a college fund, could be a mutual fund, could be an insurance company, but the big players on Wall Street are these big groups. And then you have Doug and Caroline Shreve and Aunt Susie and all these other people who own some stocks. And normally what happens is those institutions really drive and push to higher places until they don't. And so I'm not saying we're at a until they don't, but we are watching like a hawk's eye right now to see what's happening with buyers and sellers on Wall Street. And we're at really extended levels, extended from the 200-day moving average.
I'm kind of a freak because I was listening to a podcast on investing this morning about 7:30, and I enjoy this stuff, which somebody was asking me what I do for a living the other day, and I told them what I've been doing and how I'm as energized today as the day I first started it, which is just a real blessing. Not many people get a career like that. But I was listening to one by one of my favorite investors that they were referring to him, and is a guy named William O'Neill. And this guy he's still alive. He's passionate about the markets and maybe one of the best investors ever.
Agreed.
I'm guessing that people will be reading about him 100 years from now. But this person that was telling the story about O'Neill said that he walked into his office, and this is 1999 right in here, and then this is the new year 2000 right here. This is 2000. This little orange line is that I'm making up. And O'Neill had made, I bet, more than $1 billion in the market by investing by this point in time. And the guy walked into his office, and he said that O'Neill was giddy with how good he had done during this little period right here.
Control button.
And so he was just saying how great it was that he'd made all that money, and the guy that was talking to him kind of felt good about it, because sometimes when you're having success, you do have that sensation of giddiness versus the sensation of feeling foolish when you're just not doing the best that you think you can. And so anyway, I thought that was really funny, and I've had that sensation too at different times. Usually when I'm feeling giddy, it's probably a time to take some money out of the markets. And but let me show you this just to kind of put it in perspective. Right here, must be this, right about right here. I don't know, I'm gonna draw a line. Right there. So it would be at this level. The NASDAQ was 24% extended.
My goodness.
So this thing rallied from 1357 over here to this 30, what is this level here? 3,300, which is a huge rally. And I'm just gonna go forward if this will let me a little bit. It's not letting me do it very fast, I don't think. Let's see. May have to just.
And you're trying to go forward like a day at a time?
Yeah, I think because we have too much bandwidth going on here that won't let us do it. So I'm gonna go over to about this day right here. And so.
What day is that?
Hold on, let me go back to where I marked it so I can, so it's this day right here. This day is 24%.
Above the 200.
And the next
Golly.
60 days, it kept going, which is, and I told you it was over here somewhere where O'Neill, no, it was right in here where O'Neill was excited. And so, and then if I take this forward to 2002, 5132, we'll see if that lets me do that. Yeah, so it's.
Why do you have to be such a downer, man?
I'm just saying, there's an equal and opposite reaction a lot of times in the market. And so this picture, I think, can give you a feeling for why we might have some caution out there when these sorts of things happen. We're not pessimistic at all. We're very optimistic. We just know that there are these seasons in the market.
And this is the NASDAQ. There's other indices to look at, the S&P 500. That's one a lot of people like to use, the New York Stock Exchange, the Dow Jones. There's a couple. Do we have time to look at a couple? I just want to look. I want to look at a couple. Okay, so here, type in this one, Keith. This is 0UTY.
I think I've looked at this one today. That's how we're going.
Okay, so this is the Philadelphia Utility Index, and I don't know how Philadelphia got their name on there. That's something I need to learn.
Let's get the Shreve Carmel Housing Index.
Well, I mean, why can't it be the Indiana utility? But anyway, nevertheless, this is a basket, a way to see what's going on with your power companies, where you write your water, electrical, gas checks to, and I really like utility indexes because they're kind of like monopolies. Everybody needs this stuff. And so it's a great way just to see some steadiness. Well, if you compare the Philadelphia Utility Index against the NASDAQ that we just looked at, there is no comparison this year anyway. And so the point being in showing you this is that there are some indices that do really well. There are some that don't. And really, there's times as an investor where you can participate in one and not have to participate in the other. And as you've seen along the way, you might have some cash in your portfolios. And that cash could be ready to invest in something that's starting to get traction again. And so this is just a way to see, what else is going on. All things in the stock market don't behave the same way. And so the utility baskets just haven't been skyrocketing quite like the technology stocks have.
I think that's an unbelievable point. I mean, we participate. This is the monthly chart of that index, and this goes back to 2008, and this thing tripled in that 10, 11 year, 12 year period of time. And we just showed you the solar index, but what did we say, that went up 20, some crazy thing in less than a year. But I drew some red lines on here because a lot of people have been told that utilities are safe stocks, but at the same time, if we're going back to conversation about William O'Neill, is all stocks are speculative.
That's right.
What O'Neill said, and you can see just if you look at these particular, this is utilities, which people have always thought they're safe, but you can almost see these things with similar rhythms. The angle they go up, they're coming down at a very Similar angle, isn't that interesting?
So as we talk about all stocks being speculative, really all markets are speculative. And so whether you're looking at farm ground, housing, whatever it is, it's speculative. And I wrote down some conservative ones to look at, are historically conservative. Let's look at another one. Okay, 0UTY.
That's one we just did.
Oh, I wrote down the wrong one. I was
Which
looking for the gold silver index. Oh, shoot. I can't remember what it is. It's in that index
How
list.
about this one? Will this one work?
What is it? Oh, rats. Well, never mind. Let's look at this. Okay, so 0FVX.
5-year treasuries?
Okay. Look at this thing. And that looks like something that my sons would like to ski down. So this is treasuries. Well, treasuries seem like a pretty safe place to have your money. Well, I mean, the prices of treasuries can zig and zag just like any other market can. And so this is, again, just the point being, all things where you can put your money are speculative. And it highlights the importance of really just staying flexible and not being married to a certain idea, or specifically, if something has brought you success in the past, doesn't mean it's going to bring you success in the future.
Yeah, so this one might be a bit confusing to our viewers, because I think this is, the way this one works is it shows you the, not the price of those particular investments, but the interest rate on
Yields.
Yeah, and so the price does the exact opposite of this. So when interest rates drop like this, it shoots the values of these assets up in price. And so where this can be really dangerous for investors is, suppose you had money in a retirement account that's in what they call a balanced fund, and you did traditional asset allocation. Last year, where you had this, let's do it on a daily. Last year, where you had maybe a certain percentage of your money in your bond funds and a certain percentage in your stock funds, when these interest rates drop like they did here, what investors likely saw, we don't know without looking at your statement, you likely saw your value of your bond funds go up during this period of time. And then when interest rates just bottomed out here, they probably haven't done a lot. So what might happen is that a lot of that money that you might have made in your bond funds might have happened in the first half of the year last year, and probably it wouldn't be reasonable to expect your bond funds are going to drop this, the interest on is going to drop this much and push the prices up as much as they did last year. So that's a place for people, in my opinion, to really pay attention this year in those accounts that you have bond funds or bond investments, to pay attention to those things.
And we've been taught that those are safe, conservative assets. The older you get, the less stocks you should have, the more bonds you should have. And that's just, that's bad logic, because you go through different market cycles where there's different yield expectations. And we could be going into a place where those, again, become speculative assets. Last one to look at that I have is 0VXN, and this is something that we've looked at on here before.
Before we jump into that, let me make one more comment about this one, Doug, is that this one, what you might see happen, so we have, and I'm of the opinion that the Federal Reserve has been printing a lot of money, which tends to be inflationary, and these type of assets are generally the high risk ones. You may not, if you have your money in a certificate of deposit at the bank, you may not see the value of that go down if inflation kicks back in. You're just going to notice it's not going to buy as much. The example I had in my head the other day is if I bought a $100 Texas Roadhouse gift card and I held on to it for a year during inflationary time, I'm not going to get as many meals out of that $100 gift card. And that's the same way that a CD would work in an inflationary period of time. You're still going to see that $100 in the gift card. It's just going to get 4 meals instead of 5 meals at some point in time. And I noticed before we jump over there, I noticed in, when I was looking at these, here it is. Well, never mind. I'm going to go back to NASDAQ here. What I noticed is that the market started acting inflationary really close to the election. I don't know what that means or anything other than there was some, like if you look at a lot of the commodities, their prices started going up right after the election.
And that's, I apologize everybody for not getting that gold, silver.
Well, see if it's 0XAU.
Okay, thank you. Good find. Yeah. Oh, good, good. Okay, so it's been interesting over the past, oh gosh, half a year or so. Been taking a lot of questions on the commodities, specifically gold, silver, and Bitcoin. I will tell you, I know nothing about Bitcoin, but here's what I know about gold and silver. Gold and silver, unlike a corporation, there's no earnings, there's no sales, there's no Steve and Sally rallying in a board meeting trying to make it better. This is just based on supply and demand, greed, fear. And so you're going to see commodity prices zig and zag too, just like you do in other speculative areas of the marketplace. Well, this one in particular really surprised me. I anticipated to see some growth of it coming off 2 weeks ago, but instead it started to level off and really do nothing. And so again, this highlights the idea that there are times to buy things and then there's times to sit out, and developing that staying power or sitting power is just super important.
Yeah, and when I look at this, is that it doesn't look like there's, traditionally gold has been a thing that has concern for inflationary things, and this really hasn't responded in that way. This thing has gone sideways. I think if an investor's concerned with something like this, and they thought that these hard assets like this were going to rally, one place that we could talk about looking would be like the emerging markets. A lot of those smaller economies, their economy is heavily driven by those hard assets and mining and things like that. And so if you thought that was a place to go, then those marketplaces might begin to take off. You want to look at
Yeah, last one, 0VXN.
XN? This is a NASDAQ?
Man, they're almost, I tell you, this is a lot of fun, but I had some other stuff I was hoping to talk about.
Yeah, well, the next one.
Okay, so yeah, this is the CBOE volatility index, and take a look at this. This is one that we spoke a lot about this summer when we were taking a look at the pullback from the peak in, what was that, March, April timeframe. And so it's really come down, and it's come down to levels that stock investors like to see. And so, as this moves down, the optimism for the markets have moved up. And so this is just again, a way that Keith and I look at this, and we try and gauge how optimistic are people when they're making stock decisions right now. And the lower this goes, the more optimistic things become. That doesn't mean that you necessarily need to get bullish, or Keith and I are getting bullish. It might even mean a contrarian approach is, as this thing gets lower, we're not pulling out, but we have our foot a little closer to the door.
Yeah, it's a crazy little thing to see how volatility swings into the marketplaces, and it can come without any warning. And so those ideas of trying to stay calm in rough waters are things that we're hopeful to help you all manage better each day and each week and each month as we're kind of coaching you through this journey. So keep the faith. I had a question or a thought to throw out there to y'all before we break up for the week. And it was this thought is, what is the most amazing thing you've ever seen? the most amazing thing you've ever seen. And I would encourage you just to think about that for a few hours or a week this week and jot some of those things down. When I was thinking about that question, it was all a time perspective. So like when I was a kid, one of the most amazing things I ever saw was a full Christmas stocking. But set your things on those exciting, amazing things you've been involved with in your lifetime and enjoy those in the week ahead.
I guess I'll throw this out there for next week. It's just, you adults on the call, what adult skills or what skills are you learning as an adult right now? Have you learned anything new that maybe you wish you would have learned as a kid, or maybe sharpened the saw? And I wrote down a couple that from last year, then we'll get into this next week. But I learned to drive a tiller driven boat, like this, that kind of thing. I learned to, stop sharing that screen. I learned to drive one of those tiller driven boats, and oh my gosh, what a great feeling to be able to do that. I was scared starting. I thought I was going to plow right through a deck. But what skills are you learning as an adult, and what risk are you taking? I'd be interested in your feedback, and we can talk a little bit about that next week.
Sounds good.
What else, Amanda?
That's it. We're over time.
We completely robbed Amanda of her time.
Gotcha.
Next week, Amanda.
Have a great weekend.